Hi, everyone. Welcome to another episode of Bits and Bips, the interview. We've got a lot to talk about today, but as always, before we begin, just a little bit of quick housekeeping. One, nothing that you see or hear on this program is investment or financial advice. For full disclosures, please see unchainedcrypto.com/bits and bips. And second, let's take a brief moment to hear from one of our sponsors.
This episode is brought to you by Cape, America's privacy-first mobile carrier. Same premium service you'd expect from any other carrier, but designed so your number, your location, and your data actually stay yours. Get 33% off 6 months at cape.co/unchained. Fidelity has been investing in blockchain since 2014. They're not wondering if digital assets will shape the future. They're hiring the talent to help ensure they do. Explore opportunities today at crypto.fidelitycareers.com. Fidelity is an equal opportunity employer.
All right, welcome back. So I'm here with David Lawant, Head of Research at Anchorage. Welcome, David.
Hey, Steven, thanks for having me. Excited for the conversation.
Yeah, as am I. Actually have been meaning to do this for a while, and I'm glad we have a really important topic to talk about today, and one that you've recently written about. And we're sitting down right now on Wednesday afternoon, and the market is kind of on edge. I mean, Bitcoin has been bouncing around 60,000. It's been below. I think as of this recording, it's right about at 60,000 again, more than 50% off of its highs from November of 2024. And there's a lot of concern about what's going to happen with strategy, with its, I guess, most commonly known form of preferred equity, Stretch, which has been sinking. And as opposed to the market, I guess, being calmed by this sort of new financial strategy released by Strategy, no pun intended, earlier this week to sort of like rebuild its coffers, have a longer runway to pay off its dividends, put together a plan to potentially sell more Bitcoin, initiate a buyback program, etc. It seems to have had, in some ways, the opposite effect because it institutionalized Bitcoin selling, something Michael Saylor had said for a long time, never ever to do. He famously, I think, once professed to sell your kidney before you sell your Bitcoin, and a lot of analysts, myself, I'm sure yourself, and plenty of others that we follow on Twitter, have been doing the math and wondering how the strategy could get this flywheel back going, where it seems like they have to pick and choose between their common stockholders and then prefers. With that long preamble, I want to kind of get your thoughts on that right away because it is the topic of the day.
Yeah, no, awesome. Again, long overdue. Very excited for the conversation here. There's definitely no lack of things for us to discuss. I think where can we start here? I think the first point perhaps to highlight is that we probably, and this is sometimes hard to do, especially in the thick of the market price action, but I think it's also important to keep in mind that there's other factors also driving the Bitcoin price, right? There's a lot going on in broader risk assets. There's a whole theme of AI sucking a lot of capital out of the room, AI and AI adjacent themes, and maybe other things like robotics and defense. We're seeing a fair amount of outflow coming from the Bitcoin ETFs. So I think it's also important to realize that the 8K that MSTR put out earlier this week on Monday before the market opened, it is happening during a time when Bitcoin has been trading pretty much under stress. But what I would say is, yeah, I would love to hear your view and make this a conversation. But I was actually pleasantly surprised with the announcement that Strategy made. I actually tweeted this, and I used to work in traditional equity sell-side research positions in the past. I used to cover a broad range of companies, and it's not always easy to address short-term market concerns and give your company more long-term flexibility at the same time with one statement and one release and coming out this quickly. So I do think that I actually really commend the MSTR team for the job that they put. If I had to ask, I mean, I've obviously been talking to a bunch of market participants, and I would say that probably ahead of this 8K release, most folks were expecting something similar to the 8K that we saw last week. So the 8K that a lot of folks would expect had expected to see from MSTR would be maybe they're tapping the ATM, raising a few $100 million, maybe a couple $100 million, topping up their fiat reserves, maybe buying a little bit of their Bitcoin, and maybe doing some announcement around the other preferreds that are trading deep out of long to par. But what they did, I think, was something much more comprehensive, obviously. So they touched they tapped their ATM facility to a much bigger extent than I think most people would have expected. I think they raised something like $1.15 billion. Pretty much all of that went to strengthen the fiat reserve, which I think now stands at something like 16 months of dividends as well. Of course, they came with this comprehensive framework. I don't know if we want to dig too much into it and describe what is out there. They also increased the stretch dividend from $11.5 to $12 on an annualized basis. So I think the announcement was quite comprehensive. I do think also that the announcement came during a time when the Bitcoin price has been a little bit under stress. So, but all things said, I don't know. I was pleasantly surprised with the announcement, and I think it's also important to highlight that I think before the announcement was out, or probably on Friday, I think Stretch was trading at something like $75 or so. Last I saw it had recovered more to the mid 80s price. I'm trying to see where it is right now. Yeah, I'm seeing it at 87.48. So yeah, I mean, we're obviously still very far from par, and the company announced that they would like to see it between 99 to 100. But I do think that we have seen a pretty interesting recovery here. The other thing I would point out is that SATA, right, which is the stretch issued by Strive, right? Strive is this other Bitcoin treasury company. Among the Bitcoin treasury companies, Strive is probably the one that most closely follows the strategy playbook. And they also have an instrument that is similar to Stretch. It's called SATA. And SATA is also trading pretty close to par. So I think we saw a little bit of stabilization. I'm looking at SATA here. It's now at 97.9. It pays a higher dividend compared to Stretch. So that's very interesting to see. But I think we're seeing, I don't know, we can discuss a lot about what's going on in the long term, but I think the short term this week was marked by stabilization or a little bit of a return to normalcy or a partial return to normalcy, but happening during a market in which obviously the Bitcoin price has been still under pressure.
Yeah, those are all really good points, and I'm trying to think about how I want to address this, because I mean, there's a few different ways to take it. I mean, for one, I mean, as you've talked about, and I've mentioned over my last few shows, it's just a really difficult environment for crypto. I think Citi had a report that came out, it must have been this week, talking about specifically pointing out how retail participation, especially in terms of like the Mag 7 stocks, is at a multi-year low. And it wasn't definitive saying they're all rolling out of stocks, but one of the points that was made is that there's a lot of other opportunities to kind of get that sort of like very risk laden exposure. I mean, you can do the AI stocks, you can go to the stocks that are basically the suppliers to those AI firms. They didn't discount the fact that maybe some of these retail users were moving into diversified ETFs, which they're not necessarily able to track. But it really kind of showed how the retail enthusiasm is gone, and that's particularly important for crypto. And then just the added fear, the psychological importance of strategy, where many people saw it as sort of almost like I've heard it referred to as like Michael Saylor as crypto central banker in a way, or the buyer of last resort. And if that buyer is suddenly becoming a seller, potentially at size, I mean, that's an order of magnitude more worrisome in the eyes of a retail investor that doesn't understand everything than even if they're just going to pause their purchases for a while. I do agree with what you said. I mean, any smart business should always leave themselves an out. I mean, obviously, saying like sell organs before selling your Bitcoin was some tongue in cheek, and I think most people probably assumed it as such. But you do need to have a business that can withstand different market cycles. The one question that I still come up with, though, and I want to ask you about this, it just kind of goes to the core of the business model of these DATs that do have like a diversified type of cap table, cap stack, and in particular ones with Bitcoin that offer prefers. It's a non-yield bearing asset, so you have to find some way to financialize the cash that you're going to pay for it. I mean, Ethereum is yield bearing, Solana is yield bearing. I mean, the native yields on those assets isn't by themselves enough to cover the dividends that these things are paying anyway. But I'm sorry, maybe that was a Freudian slip. Bitcoin generates no native yield. So there's always going to be this flywheel up or down that has to be managed. Like, how do you think about that in a market like this?
Yeah, no, that's a great point. And while there's many ways I can take this. The one thing I would say, and this is just detaching a little bit from the strategy conversation, I actually put out a long paper on this about how folks have been using options to generate synthetic yield, right? So strategies like covered call selling. I wrote a very long paper on this, trying to show what are the type of results, or the consistency of positive yields that you are able to implement in a typical or traditional covered call selling strategy. And this is interesting, and we have seen a bunch of market participants take advantage of these types of strategies. But in this case, yes, you are right. Bitcoin doesn't have a native yield, so it is a lot different. The strategy that a Bitcoin treasury company will implement versus what an Ethereum or Solana or Hype treasury company. I fully agree with that. The other thing I would highlight, though, is that Bitcoin might have some advantages, right? So if you think about strategy, I mean, they have the option. They're probably the only one of the only, if not the only company that can issue preferreds, right? Because they have an active and liquid options chain that allows them, converts in order to do those. They have enough market gravitas and in order to issue ATM equity, and also all these preferred instruments. The thing I want to say, though, is I want to say two things here about your commentary, which is very interesting. Number one is, I think it's important to keep in mind that Saylor was the OG in this whole Bitcoin, let's say, institutional Bitcoin accumulation strategy. And I think sometimes these narratives, they develop much more iteratively than actually being set in stone from day zero. I think over time, we're all learning that maybe an institutional Bitcoin accumulation strategy can look a lot like active management, instead of looking much more like the HODL forever that maybe a lot of folks, or like maybe a lot of us, would do in our PA. So I think that's fine. I'm fine with the strategy evolving over time, or the narrative evolving over time, and I think that is part of the process. That is part of being a pioneer in these types of strategies that have been so successful for the past many years.
Sure.
Yeah, that's what I would say. And then on top of Bitcoin specifically, I think one thing to keep in mind is that holders of Stretch, or holders of probably any part of the MSTR capital stack, are probably folks who are betting that Bitcoin will succeed. And basically the type of analysis that they need to do is, what do they think is the return profile that Bitcoin will have in the future? what is the type of risk management that the company is doing, how strong the balance sheet is to storm the inevitable, more difficult times that we're going to have, like the ones that we're seeing today. And that's basically the risk that they need to underwrite. I think so far MicroStrategy or strategy has been doing a good job in terms of weathering that storm. Of course, in hindsight, it's always easier. It's always easy to criticize without being there. But I think they've been reacting quickly. They've been reacting boldly. And we're starting to see the market normalize. Of course, these things don't happen all of a sudden. They're not going to happen overnight. But I think we're seeing some of that.
Yeah, well, I'm from Philadelphia, so I know how to criticize people, especially my sports teams. But I am glad you kind of like led us into some of the work that you've been doing at Anchorage, because at this point, I mean, sure, people are looking for signs of hope for natural purposes, but you laid out a pretty interesting case looking at the options market, which is slowly maturing for crypto, and sort of pointing out how, sure, there is a bit of a negative skew, but it's not flashing red. And I sort of interpreted this, and I'd like you to kind of walk us through a little bit of how you did your research, because you sort of systematically looked at different options marketplaces that test different parts of the market to kind of come to your conclusions. And as I was interpreting what you wrote, I would imagine that a lot of people kind of saw it as a form of relief, as opposed to perhaps like the fear and greed index, which is not scientific at all, but it is widely used within crypto and is flashing bright red. So maybe now is a good opportunity for you to just walk me through like why you decided to look at the options market in particular, and really just point out like we'll get into it a little bit more, but what are like your top 1 or 2 conclusions from it for people who haven't read it yet?
Yeah, 100%. We'll love to touch on this. So this is a piece we published, a shorter article we published just last week. And before we get there, one place that I think is very overlooked in terms of like just observing the market is options. I think folks sometimes don't realize how big especially the Bitcoin options market has become over the past 2 years or so. I wrote this report with data as of the end of April. And by then, if you added the open interest only in the 2 most liquid options markets, right, which is basically the Deribit BTC market and also the IBIT options market, if you add these 2, we're talking about something around $60 billion of open interest. That compares, and that number is already bigger than the whole futures complex. So if you take, for example, Binance Perps, Bybit Perps, OKX Perps, Hyperliquid, if you take the whole CME dated futures complex, if you add all those futures contracts, you're talking about something that is at the time was around $50 billion or so. So the options market is already bigger than the whole futures market, which is not something that should be very surprising, right? If you look into more traditional markets like equities, the options market is much bigger than the futures market in terms of open interest, actually even to a bigger degree. In the equities market, the options market can be 3 to sometimes even 10 times bigger than futures. Here in crypto, we're talking about 10 to 15% or so. So
I would imagine that's probably news to a lot of people that their first experience investing is with crypto, and they may not even know what options are, let alone understand the scale of something that is sort of like elementary to people like you and me.
100%. Yeah, 100%. So this is a phenomenon that basically unfolded over the past year and a half or so. So this was not the case. I mean, you know this well. You've been looking at this market for a while. Probably 5 or 6 years ago, you could just look at what's happening on the Bitcoin spot market and on the Bitcoin perps market. That's all you had to look at. Today, the picture is much more nuanced and much more sophisticated. And options is kind of this new piece of the puzzle. So that's basically the reason why I wanted to focus on options, not necessarily from a lens of an options trader. Not like I mean, there's a lot you can do on the option side, like those synthetic yield strategies that I mentioned. There's obviously the whole volatility trading complex. There's a lot that you can do on options. But basically, the approach that I tried to take on that report was to show what are the signals that the options market are showing us and what are the things that can be informative in order to make sure that if we ever get out of the current kind of price struggle that we are in. So basically, the three main signals that I was pointing there were actually, number one was actually related to strategy. Now I think this is less of a news, but last week when we published that report, we were at the very thick of the stretch drama. And what we were showing is that this thing that we call the risk reversal at the wing. So basically, that's a way for you to measure how much the market is pricing in terms of tail risk for MSTR stocks. So here I'm talking about MSTR options specifically, not Bitcoin options. And if you look at the MSTR options complex, what the market is showing you, and this is by just comparing by how much the market is paying to hedge against left tail risk versus how much it's paying in order to get exposure to right tail risk, right? That's kind of a little bit of a way for you to measure these deep distortions and what the market is expecting. And what you could see on MSTR just last week was that there was definitely pressure, that was definitely demand for hedging downside on MSTR equity, but the fear levels were much lower than they have been. Actually, even in recent down moves. So if you compare how this demand for left tail risk has been compared, for example, to the January or February market sell-off, or to the Liberation Day stock market crash in April of 2025, we're at much lower levels. So what the options market was telling us is actually the option market was sending this very interesting signal that although the market was showing signs of panic on the stretch price, even a little bit on MSTR equity, the options market was telling that the situation might not be as bad as some of these markets were pricing, and that turned out to be right. So now we have stretch trading much closer to the 100 level, or at least so far it proved to be a favorable signal. And a correct signal. So this is basically the approach that I try to take on this report, trying to read some of the signals and what they are telling us about the future. I'm happy to tell you a little bit about what we're seeing in the Bitcoin options market per se, but I wanted to give this strategy example just as something that in the very short term I think would be kind of helpful. I think you're on mute. Yeah.
And we're going to get into all of that. But before we do, we need to take one more quick break to hear from some of our sponsors.
If you hold crypto on your phone, your biggest vulnerability isn't your wallet. It's your carrier. AT&T, Verizon, and T-Mobile have been breached again and again. And SIM swaps are still one of the easiest ways for attackers to drain accounts. That's where Cape comes in. America's privacy-first mobile carrier. Same premium service, but Cape rotates the identifier on your SIM every 24 hours, deletes your call and text metadata after a day, and protects against SIM swaps with a 24-word recovery phrase that only you control. You also get 2 middle-to-end encrypted secondary numbers for banking and signups, so you stop handing your real number to every app that asks. Go to cape.co/unchained and use code UNCHAINED for 33% off your first 6 months. Fidelity has been researching and investing in blockchain since 2014, long before it was a headline, and they're hiring crypto and DeFi professionals to join their team and discover what's next in finance. Fidelity is looking for people with fresh perspectives from different backgrounds, whether it's tech, UX, or product design, whether you're crypto savvy or crypto curious, as long as you have the passion to make a real impact at a company striving to make finance accessible to all. Explore crypto careers at Fidelity today and make the decision that could change change your future for the better. Visit crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer.
So welcome back. Talking with David Lawant, head of research at Anchorage, about a recent report that he put out looking at options market in general when it comes to crypto, but a particular focus on MSTR. And you're making the case that it's not as dire as I guess some people on crypto Twitter are making it out to look. But I do have a couple just follow-ups that would come to mind. For one, different options have different types of expiry. So I'd love for you to just talk a little bit about the time horizons for what you're looking at, and to just maybe go a little bit deeper into what you have. I guess it wouldn't be too hard to argue that, sure, maybe the I guess like the put call skew or whatever the terminology is that you used, they if a lot of the weekends have been flushed out, perhaps there isn't as, I guess, who's ever left may not worry that there's as far to go down as there is now. So maybe they do want to have a little bit of exposure to that upside. But I guess my real question is, how do you're saying things look okay now. What do you think that means in like the broader context? And does it just mean that you think we're close to the bottom? Do you think, what do you make of it?
Yeah, 100%. So in terms of, very good question. A lot in there. In terms of expiries, I think it depends a little bit on what the specific analysis call for. So yeah, you are very right. You can look into options over the next 7 days. I mean, if you're looking very short term, you can look at options for the next day. But let's say you can look at options for the next 7 days, 14, 21, 60, 90 days, even longer term than that. So it depends a little bit on the analysis. For the example that I just gave you, the MSTR risk reversal, we were looking at 30 days, which is what I would say is kind of the standard that most folks look at when they are doing these types of analyses. Having that said, another analysis that we did in that report was to kind of dig a little bit deeper on exactly what you were saying, in the sense that how volatility is being priced over time. So in a sense, this is what we would technically call the volatility term structure. So how much investors are paying to hedge or have exposure to Bitcoin options. And here I'm moving to MSTR options, just going to the Bitcoin market per se. So I think the analysis here is more interesting. How much folks are paying for short-term volatility, let's say over the next 14 days versus over the next 21, 30, 60, or 90 days. And the thing that was interesting, and I mean, I don't think this is going to be a completely new insight because a lot of folks intuitively feel that, but the Bitcoin volatility term structure has been inverted for quite a long time now, for like 6 to 8 months, meaning investors are more concerned about the short term than they are concerned about the long term. It is as if the market is living in this perpetual state of near-term awareness or near-term anxiety, which probably is something that is familiar to anyone who has been following the market for a while, right?
Yeah, it reminds me a little bit of sort of an inverted yield curve when it comes to U.S. Treasuries, where it's like more expensive to borrow money now than it is get into the future.
Yeah, 100%. It's not the natural state, right? Usually these curves
not supposed to go that way.
Yeah, exactly. Usually these curves are skewed positively, but for Bitcoin, it's been the other way around. And the way I interpret this is that the market has all these short-term concerns, and they are kind of coming in and off on a rotating basis. Sometimes the short-term concern is geopolitical concerns. Sometimes it's the Federal Reserve independence. Sometimes it's the inflation or growth outlook. Sometimes it's the story around MSTR or stretch. Sometimes maybe it's going to be about the Clarity Act, which is probably, yeah, we're getting to the time when that story is going to be more relevant over the next few weeks. But whatever that is, the market is very focused on this near term story, and this indicator kind of relates to that. So one thing that I would pay attention to, like if I were to look for a market that is a little bit less near-term anxious and start to kind of take on a more sustainable trend, would be for this curve to get a more regular shape, right? For now, the signal is not flashing, but it's something that I would be looking for in order to be more confident with some sort of, let's say, market normalization, right? So if we get to a sustainable trend and things start to move out from here, we're not there yet, but that's one place to look at.
One question I want to ask, and this is I particularly want to ask you because I mean you your experience at Falcon X and now research at Anchorage, you had access exposure to some pretty major trading desks. Who is participating in these options markets? I mean, clearly it really needs to be institutions that can get on board to these types of platforms, but yeah, and maybe just contextualize it a little bit. Like who has money at stake here? Are these people just trying to obviously protect their downside? But who are these participants? If we're going to read their tea leaves, I think my audience would like to know whose leaves they're actually reading.
Yeah, 100%. That's a great question. And I think it will depend a little bit as well on the options market, right? So if you take, let's say, Bitcoin, which is the most established asset and the one that has the more, let's say, layered market structure, you have a bunch of different options markets that are pretty big, right? So the two I mentioned already are the Deribit BTC markets. That's where I would say the more crypto native flows play in. And you also have the IBIT options market, right? So these are options on IBIT, on a Bitcoin spot ETF, and not on Bitcoin per se. Those are more like TradFi flows.
There are trade on the NYSE, correct?
Yes, I think they trade. Yeah, I'm not sure if they trade on the NYSE or on Nasdaq, but yes.
Okay. Either one of those tier one.
Yeah, one of the main exchanges. And the other thing I would say is there are other options markets. So for example, there's a CME options market, right? So these are options on CME futures. They are relatively smaller.
Actually, at Forbes, one of my former researchers used to publish reports on the COT reports from the CME that came out every week, the Commitment of Traders reports.
Nice.
As a proxy for like how institutions were treating. And this was before all this, yeah. But yeah.
Yeah, that's 100%. Yeah, these are super insightful. There are other options markets too. So like Binance has options and some of the other crypto exchanges. But if you look into IBIT and Deribit, you're probably capturing like 90% of the market. And then on top of that, you have what we call OTC options, right? So bilateral options. That's what we do at Anchorage and other trading desks, right? So a lot of clients, they won't trade directly at an exchange. They will trade bilaterally with a trading desk. So these are more institutional, a more institutional market. But if I had to paint a broad picture here, I think it's actually a very wide range of investors. Of course, you have the more the retail base and the more degen retail that is probably using options as a way to get excess leverage, right? These are usually the folks who are buying these out of the money calls in order to just get asymmetric exposure to the asset, either on the downside or on the upside. So that's one actually quite big public. If you look at the composition of Bitcoin options, it is much more call heavy than it is in traditional markets, especially in the larger markets, right? So if you look into S&P options or NASDAQ QQQ options, the NASDAQ ETF options, these markets are usually 1/3 calls and 2/3 put options. Mm-hmm. In the Bitcoin space, it's the other way around. It's 2/3 calls and 1/3 put. So there's a lot more demand for upside, for topside structures than there is in these broader indices.
It's kind of like a YOLO FOMO type of option trader in crypto. So that is
exactly. And this is a public that has always been there, has been trading on on Deribit and now with iBit, and they have been around. But the interesting trend is that this market started to get a lot more sophisticated. So today you have crypto hedge funds, you even have some funds that are specialized on trading only volatility. So basically they are only looking at options and not necessarily trading the underlying price of the asset, but they're more making bets on how volatility will behave over time. Of course, you have a very broad and I would say increasing range of investors who are looking as options, looking to options as a way to extract yield from the asset, right? So here you have a lot of folks who have been sitting on large piles, especially I would say Bitcoin, but also some of the other assets too. Mm-hmm. So you can think about treasury companies, you can think about miners or foundations, you can think about high net worth individuals and whales. So a lot of these folks have been using options as well in order to extract yield. So yeah, today it's just a very broad range, which is
yeah. So great. I guess my one question, and I want to move on because we're starting to get close to time. If we're waiting for the options curve, for lack of a better term, to normalize, who do you think needs to, who needs to sort of correct their behavior, for lack of a better term, in order to kind of, because it sounds like it's a diverse group, but you also are pointing out how it is probably more retail driven than like the S&P. So like, what's the signal that my my viewers or listeners should pay attention to get a sense of whether or not this options curve is normalizing?
Yeah, 100%. And I guess maybe I would even broaden the perspective here. I think the options, the term structure is one of the signals, but there are many other signals that I would pay attention to, not only on the options market, but also liquidity trends, right? So things like spot volume, how the Bitcoin spot order book is looking like, demand for leverage, right? Basis, both in the CME and in the perps markets. There's a number of indicators, also some of them like looking at what is the spread across exchanges for us to try to gauge if the flows are more coming from US domestic flows or more from like international offshore exchanges. So there is a broad range of indicators that I would look into. But the main thing that needs to happen, I think, is actually basically two things. Number one, probably liquidity conditions, right? So it's probably too early to call for Fed interest rate cuts. But if whenever that starts to happen at a later point, maybe this year, maybe next year, I think this is something that would really help risk assets like Bitcoin and crypto more generally that are not necessarily in the hot theme of the moment. So that's one thing, like overall liquidity conditions. And second, I think we need to see Bitcoin and crypto more generally kind of regain a grip of the narrative. I think just right now we're out of favor. The market has this mentality of abundance and the AI frenzy and AI adjacent themes, and that is fine. We have seen this many times in the past, but the world always kind of exerts or scarcity always gets impinged upon us, right, at some point. And maybe when that story starts to change, I see a lot of folks looking at maybe the potential IPO of Anthropic or OpenAI as kind of marking the high of this AI frenzy. Again, nothing against AI as a technology. This is obviously a mind-blowing technology that will change the world, but investment cycles can come and go. And I think a lot of folks are expecting to see when these tides are going to turn a little more. So if I had to guess on one specific public, I think it's still the fundamental US domestic investor, either retail or institutional. All the crypto rallies that we saw over the past 2 years and a half were not sustainable if they didn't have some sort of degree of US domestic participation. And I don't think it's going to be different this time.
Well, I can't wait till we have options on perps markets, but we'll have to wait for that for another time. I do want to ask you one more question about your report, though. I'd love to understand the interaction of how options traders treat something like MSTR, which is kind of like a high beta play on Bitcoin, versus Bitcoin itself, particularly during this climate. But then even if you can expand it out a little bit further, maybe like touch on a couple of the major alts like Ethereum and Solana.
Yeah, 100%. So, one of the things that I actually touched briefly on the report, one of these other option indicators that I look at is actually how maybe not MSTR per se, but how IBIT option investors are positioned compared to Deribit BTC investors, right? So the IBIT investors would represent more the TradFi part of the market, while the Deribit investors would represent the more crypto native part of the market. Historically, what we've seen is that whenever the crypto native market starts to get more defensive than the traditional finance market, that's usually an interesting turning point to pay attention to. So that's one example of a signal that I would look into. So like just comparing relative positioning across these different options markets, I think they're definitely interesting and a great thing to look at. In terms of the other options markets, yeah, for sure. I mean, the interesting thing here is that maybe this is the part where the OTC market is more advanced than what we can see just in the listed markets. Because if you call an OTC desk, you have a much broader range of options that you can invest in, right? While if you look at Deribit, of course, the range there has been opening. There's BTC, there's ETH, there's SOL. Hype options were just listed, I think, just last week. So of course the range is broadening. But if you talk to an OTC desk, the range of options that you have here, or the range of underlying assets, is much broader. What I would say is that when we talk about non-BTC options, kind of the usual suspects are the ones where we see more attention. Hype, definitely one. ETH and SOL as being these big non-BTC established assets, they also get a bunch of attention.
Okay. All right. So just about to wrap up, but I do want to kind of just pull things back a little bit, think longer out. Clearly, you are anticipating, I think, more, I guess, more pleasure than pain in the coming months when it comes to the market. So I'd love for you to maybe just expand a little bit as to why. Is it more of just sort of like a technical setup where seller exhaustion is getting close to I guess reaching critical levels, and there's going to be a jump? Is it Clarity Act coming, and that's going to be a big catalyst to sort of reinvigorate buying pressure across retail and institutional? I mean, what do you see? And I'm really curious too, to the extent you can share, when you talk to traders that engage with Anchorage's OTC desk, or just in your daily conversations with market participants, I think, what are the bullish triggers that they're banking on?
Yeah, 100%. These are great questions. What I would say that is that I think the current positioning is everybody, I mean, most folks, they don't see this bear market as a secular bear market. They do see us getting back to a bull market, but that's probably not coming this next 6 to 9 months. I would say that's probably the average opinion that I hear. Between now and then, most folks are expecting a choppy market. There are some short-term indicators that give us the perception that there has been a little bit of seller exhaustion. So for example, if you look at the Bitcoin order book, right? So the Bitcoin spot order book, all these orders that are sitting on all these exchanges, whenever we get to the 60K level or slightly under the 60K level, the extent to which the order book skews to the buy side is actually very impressive. What this means is that whenever we get below the 60K level, there's a big phenomenon of seller exhaustion that happens very strongly and very quickly. We also see this for example, at our desk. Whenever we're under the 60K level, the amount of capital that we see deployed, even from crypto native investors that still have some money on the sideline, is very significant. So these are the things that give me the perception that, at least in the short term, I don't think we're going to go much lower than the 60K level. Of course, everything can change. Of course, this is a market that is exposed and can be exposed to a bunch of macro shocks. A lot of these liquidity trends, they can change very quickly. These are assessments that we're continually making. But right now, it does feel like that the amount of selling pressure that we had has exhausted. So we'll see how we go from here.
Okay. All right. Well, we need to wrap things up. But before we go, David, just wanted to give you a chance to share anything else that you'd like to share with our audience.
Awesome. No, thank you so much, Steven. Great to be here. I've been a long time listener of Bits and Bips and Bits and Bips, the interview. Really great chatting. I always love talking to you. For folks who want to look into more, you can look into my Twitter profile, Lawant, DLAWANT. Our reports are usually posted there. And also look into our website at Anchorage Digital, www.anchorage.com. You can find a lot of more information there.
Okay, terrific. Well, we'll have to have you back. Thanks for joining us. Thanks to everybody for watching and listening. Stick around.